Good afternoon, everybody. Hopefully you can hear me okay. Do shout out with questions as we go along, because I'm sure you've got lots of questions. So my background is quite entrepreneurial. Over the last 15 years, I've set up and exited 2 different businesses, both high-tech businesses, and Crowdcube's my 3rd business now. But what we don't seem to do in this country is really kind of incubate those ideas and nurture them and help those people with those ideas to take them from being ideas to being real companies, real revenue-generating companies. And there's lots of reasons why that doesn't happen. But I think that's a real failure that we have in the UK compared to the big companies that we see coming out of the US, the Googles, the Twitters, the Groupons, Facebooks, you know, you could go on and on. You don't see those big companies coming out of the UK. And there are a multitude of reasons why that happens, but there's probably a bigger reason than most of them. And I'm sure you can all guess what that is, and that's the reason we're here today, is that there's this real lack of access to money. And that's always bothered me. And I've always wanted to do something about that. And being an entrepreneur, I've always seen that, you know, if I could get access to that money, I could make things happen, and I'm sure you all feel the same way. So I thought, well, how can we make a change? How can we invent a new way for people to raise money? How can we empower entrepreneurs to raise money for themselves? So I thought, well, best place to start is to have a look at the way that people raise money at the moment and see what we can learn from those. And I've had some experience with the various different ways of raising money in the past from my previous companies. So if we look at the ways that people have traditionally raised money, the first one up there, venture capital. So it's every startup company's dream to get funded by a VC, and you know they'll come in with multi-millions and you know go on to be a big success. But the reality is that there's relatively few VCs out there. They do relatively few investments, and they are in the position where they can pick and choose which ones they want to invest in. They choose the cream of the crop. They choose the companies that are going to go on to be worth tens, if not hundreds of millions of pounds. And so the reality is that the majority of companies don't get funded by VCs. Debt finance. Well, we could talk all day about the banks. The banks aren't lending. To be honest, the banks have never lent a huge amount to startups and early stage companies in particular. But these days, times are even harder, and it's just really not very possible for those early stage companies to get debt finance. The third one we've got up there is business angels. And Crowdcube itself has been funded by business angels. My previous company has been funded by business angels. I think it's a great way for businesses to get off the ground and get some funding in there and get some advice as well. But there's a fundamental problem with business angel finance, and there's a supply and demand problem. There's far more businesses out there that are looking for finance than there are angels to be able to give them that finance. So, you know, angels typically invest tens of thousands of pounds, and there's just not enough wealthy people out there with that kind of cash to spare willing to take that risk on an early stage or startup company to invest in these kind of companies. So my thoughts were, well, how can we lower that barrier? How could we make it easier for people to become a business angel and thus make more of them and thus solve the problem with this supply and demand problem? So business angels tend to invest together. They invest in a syndicate, and they tend to invest tens of thousands of pounds each. So I thought, well, what if there was a way to allow people to invest £10? What if we could get 5,000 angels to invest £10 each? Or what if we get 500 to invest 100? Or what if we could get 50 to invest 1,000? Suddenly you start getting things moving. And what if we could basically allow anybody to become a business angel? So that was what I came up with, and the result was Crowdcube. So what is Crowdcube? Crowdcube is a web-based platform that helps entrepreneurs, it empowers entrepreneurs to raise money from what we kind of term micro-investors, or the crowd. And in this case, what we're trying to do is to democratize investment and to allow anybody to invest in these exciting early stage companies from as little as £10. So you can invest from £10 upwards, there's no limit, in these exciting companies. And the other side of that, what we're also trying to do is give the ordinary person, the man on the street, the opportunity to invest in these exciting companies, which until recently has been the preserve of the wealthy and the elite. So really, again, it's trying to democratize investment, allow anybody to invest in these companies. And if we fulfill both of those things, then we end up with a situation where investors can invest in exciting companies and early stage companies can get finance. So we use this concept called crowdfunding. It's starting to become a little bit better known now. It's a very simple concept. The concept is the pooling of lots of smaller amounts of money to raise a much larger amount of money for a particular purpose. In the purpose of Crowdcube, we're talking about raising business finance. But there are lots of other ways that crowdfunding is applied as well. And you might think, well, that's not particularly new. People have been pooling money together for particular kind of causes for a long, long time, hundreds of years probably. But of course, what's changed at the moment, we're now in the 21st century, is we have the internet and we have social media in particular, which makes this happen on a much bigger scale, much quicker and much more effectively. So the internet and social media has really changed what we can do and the scale that we can achieve it at. So when we were looking at the possibility of doing crowdfunding for equity, which is what Crowdcube does, and raising business finance, we thought, well, we'll have a look at how successful crowdfunding is being in other areas and see whether it really can scale to the size of the amounts of money we're looking to raise. And we looked at two very successful crowdfunding sites. One's called Kiva, which is quite prolific. It's been around for about 5 years now, quite a long time in internet time. And what Kiva does is it allows people to lend small amounts of money, typically $25 or increments of $25, to companies in emerging countries and to try and help them get off the ground or grow their businesses. And then those small businesses will pay you back your $25 over a period of months. And then if you wish, you can then reinvest it into another business. So it's kind of charitable, it's kind of philanthropical. But it really gets things moving. And you can see the numbers there. I mean, there's huge amounts of money being raised from a hell of a lot of people. We're talking about 1 million people lending and 1 million people borrowing money. And then the other site we looked at, which is probably the most famous crowdfunding site out there at the moment, is called Kickstarter. And Kickstarter's niche in the crowdfunding world is for artistic projects. So it's for people who are artists, filmmakers, musicians. And to give you an example, there might be a band that wants to raise £10,000 to do a production of a new album, small band. And they might want to call on their fans to invest small amounts of money, perhaps 10 quid, 20 quid, invest in them for this particular project to raise this next album. And then once they raise their £10,000, anybody who's invested the 10 quid can then get a free download of that album. So it's a way to help artists to raise particular money for particular projects. And again, you can see the amount of the stats there. These are quite out of date now. I think they've raised over $400 million now, and they've only been going since 2009. So the amounts of money that can be raised convinced us that this really was a way for businesses to raise money. And what really convinced us most recently was this project, which I don't know whether you've seen this one. It's quite astounding. So this is Kickstarter. This is a pitch on the Kickstarter website, and the product here, or the project, was to create this e-paper watch. So it uses the technology that you see on an Amazon Kindle, and the watch communicates with an iPhone or an Android phone, and it can send data from one to the other and applications, and it can send calls to your watch, and it's just a really kind of cool watch. And these guys had the idea, they had the blueprints, they designed it and everything, and they just wanted to get it manufactured. And they needed, you can see $100,000 there, the goal on the right-hand side. They need $100,000 to actually manufacture the watch. So I thought, well, yeah, we'll put it up on Kickstarter and see if we can raise $100,000. And I think they had 45 days to do it. In the first day, they raised $100,000. And you can see by the end of the project, they'd raised $10 million from 68,000 people. So they now have $10 million in the bank, and they now have to fulfill 68,000 orders of this watch. Just completely mind-blowing stuff. So it really can scale to huge amounts. So let me tell you a little bit more about Crowdcube, about what we do. So I think hopefully you've got the gist of what we do. This is our website. At the top there we've got a few examples, a banner that rolls around showing some of the pitches that we've funded in the past. And below that we've got a number of summaries of the different businesses that we have on the site who are currently raising money. So the summary will just tell you how much they're looking for. It's got a kind of blue Peter bar there to show you the totalizer, how much they've raised so far, the percentage-wise. A little summary of what the business does, just a little tempter to make you excited enough to want to drill down and look at that business in a bit more detail. Anybody can sign up to the site. There's no, in terms of becoming an investor, there's no restrictions. Anybody can do it. As I say, we are trying to open this to everybody. And once you've signed up, you can flick through and look at any of the pictures on there and decide which of them you might be tempted to put your hand in your pocket to invest in. So if we drill down onto one of these now, this is a pitch that I took a snapshot a few weeks ago. I think we funded this guy a couple of weeks ago now. So let me explain what you see on here. So on the top right hand side there, Thoughtful Bread Company, they're looking for £55,000. They were an interesting company. They've been doing pretty well. They've been established for a few years, so not a complete startup. And they had a bread stall, which was, I think it was on Bath Station forecourt. And they were doing well, but they wanted to have a proper premise to sell their bread. So that's the reason they wanted to raise their £55,000. And they were giving away 20% equity in the company. So Duncan, who's the guy there you'll see in the video, he's the guy who decided how much money he wanted to raise. He came to us deciding how much equity he wanted to give away. So he sets the valuation. The entrepreneur sets the valuation of their company. And the ultimate test of whether you got the valuation right, of course, is whether people put money in or not. If you get your valuation wrong, you might not get any investors. So there's a difficult balance to be made there. So you can see below that, at this point in time, they'd raised just over £38,000 from 20 investors. And the progress at that point in time was 69%. And on Crowdcube, I mean, we're all about equity. We're all about giving away equity for investment here, of course. So that's what is summarised at the top there. But you can also give away rewards, just in the same way as you saw on Kickstarter. And I explained about a band. If you've got a product that you think investors might want, then you can tempt them and sweeten the deal with something. So this guy is giving away some mince pies on the very low end, but on the higher end he's giving away baking lessons and all sorts of different things that might just kind of give somebody something really interesting back for their investment as well as the shares. In the centre part of the pitch there, you can see some basic details about the company. There's some sharing icons because, of course, what we're trying to do here is leverage social media to try and get the word spread. And this one really did go viral on Twitter and Facebook, particularly in the kind of the baking community, if you like. Lots of people were talking about it, and the word really did spread using social media. All pitches on Crowdcube must have a video. We find this really effective. Because it's an online mechanism, you don't have the benefit of sitting opposite an entrepreneur and kind of seeing the whites of their eyes. So this is the next best thing. And we do ask entrepreneurs to do a video and generally for it to have a piece to camera so you can actually see the person. And it's an opportunity for the entrepreneur to get across their passion and their belief in their business. It really does.
You don't have to put up with those awful dragon days, people looking at you.
You don't, no, that's right, yeah. You don't have to stand there sweating. Yeah. So the video is really important, and a good video can make a huge difference. Around the video, you'll see the basic description of the business, and this is where the entrepreneur needs to sell themselves. You know, this is a selling page here, so it's almost e-commerce. You're trying to actually sell your business here, remember. So they need to be bolshy. They need to big themselves up in this part here and really do a good selling job. The text continues, and the text can be as long or as short as you like. Again, it needs to be salesy. It needs to get the person interested to put the hand in their pocket. Images for the right kind of products, and this is quite a visual product. You can upload all your images of your products and the people involved. And then key for us down at the bottom there are the documents. So we require everybody to have a business plan. Everybody must have a financial forecast for at least 3 years, profit and loss, balance sheet, cash flow. And that's how we vet the businesses that come through to us. So we have, I don't know, probably on average 5 applications to go on Crowdcube every day. And we turn away about 75% of those who apply to go on Crowdcube in the first instance. And mainly because we just don't feel they're investment ready. So we don't feel that they've got what Duncan has here. He's got the credentials to present himself to our investor base, and enough information for an investor when looking at the pitch to think, yes, I can see why I would want to invest in that business. So it's all about having a really well written and comprehensive business plan and well thought out figures and convincing figures. And that's what we really focus on. And so often we will turn people away and say, well, look, you need to work on your business plan. Come back to us when you've done this, that, or the other, and then we'll list them on Crowdcube. So, there's a lot of work that needs to be done. And I'm sure you understand that, whichever way you raise money, none of them are easy. This isn't an easy way of raising money. And whichever way you go, you're probably going to need a business plan and financial forecast anyway. So the benefits of Crowdcube and kind of crowdfunding are quite different from the normal ways of raising money that we've talked about in the past. And of course we have a two-sided marketplace here. We're trying to satisfy 2 different types of people. On one hand, the entrepreneur, and that's what we're about as a company. Our ethos is to try and empower entrepreneurs to raise money. But to do that, we need to please investors as well, so we have to do 2 things. So from an entrepreneur's point of view, obviously this is a new way to raise finance. And we're not saying this is the best way to raise finance. It should sit alongside those other methods. And it's horses for courses. Some people would prefer debt finance, some people would prefer equity, depending on the type of business that you've got and your ambitions. But this is just another way. We're trying. I think entrepreneurs need to have as many choices as possible in today's economy. So this is what we're really trying to do. And of course, because it's online, you get UK-wide investor reach. So if you look at angel networks, typically they are geographically located in a particular region. So I know in Wales there's cynnwys, for instance. And every particular region around the UK has their own angel networks. But this is a very national and, in fact, international way of raising money. So you can call on the whole of the UK to invest. It's really easy to promote as well. I mean, we talked about social media. So the whole idea is once you're up there, push that message out to your network. Use social media, use email. Go offline as well. I mean, a lot of the businesses that come through to us, they do PR. They get out into particular press, vertical press, niche press, industry press, but sometimes national as well. So use any mechanism you can to spread the word that you're raising money. And we also think this is a really cost-effective way of raising money because, again, being entrepreneurs, what we're very conscious of is, well, I've been approached by angel networks and other intermediaries in the past who've asked me to pay perhaps several £1,000s up front to raise money for my business. And it just galls me that I have to pay that money up front without any guarantee of success. So we're completely success driven. We charge 5% of monies raised if you raise the money. If you don't raise the money, we won't charge you a penny. So we're all about the success and about you raising your money. Yeah.
Do you get involved with pre-start businesses?
Pre-start businesses, pre-revenue businesses, or?
Yeah, pre-revenue.
Sure. Yeah, absolutely. Yeah.
And part of the statistics you gave us earlier, is there a good representation of pre-start in there?
Which statistics was that?
Is there a good representation in the companies you've helped so far?
Oh, I see.
That are pre-revenue?
Surprisingly, there are very few complete proper startups that we've funded. I would say probably about 10–15% of them. The ones that we've funded so far tend to be between 6 and 18 months old, something like that. So, they're by no means well established, but they've got something there, and they've got a little bit of proof of traction. And you can obviously see from an investor's point of view, they just kind of prefer to have that kind of certainty, or more certainty, perhaps.
What control do you exercise? What control do you exercise during the period of the loan that you're becoming?
What control do we exercise? What do you mean?
On the entrepreneur. Do you exercise any controls on the direction of the business?
No, I mean, okay, so we don't get involved as Crowdfunding. Yeah, I mean, we don't get involved in that at all. Our job is to help you raise the money and help entrepreneurs. So when we get to a stage where the investors have got share certificates in their hands and the investee company's got the money in the bank, that's our job done. And we encourage them to maintain a relationship, but we're not involved from that point onwards.
Can you just be clear, the money that the investors are lending?
Investing, not lending.
Investing. They're buying a share of the business as such.
Yeah.
And is that the same for every investment?
Yeah. So it's all about equity. There's absolutely, yeah. It's an investment. It's a long-term investment. These are perhaps I didn't make that clear, but this is equity investment. So investors are putting money in and hoping that at some point in time they're going to get either a dividend back, or that probably more likely they're hoping you're going to sell your company or float your company and it's going to be worth 10 times as much as when they invested, and they're going to get a multiple return on their investment. So that needs to be part of your pitch.
Yeah.
We didn't see it on there, but every pitch has an exit strategy section where you need to explain how people are going to get their money back. If I give you £1,000, when am I going to get £2,000 back?
Yeah.
Does the documentation pack include an investor agreement, or do you have anything else?
We don't have investor agreements. Everything's done through the Articles of Association. It just makes things a lot simpler, and we don't have to get 60, 80, 100 people to sign a particular document then. So it's all done through the Articles of Association. The way that we do it is through different classes of shares. So we have two different classes of shares, A and B shares. A shares are for the owners and the founders and the original shareholders of the business, and they're voting shares and they have preemption. The crowd, if you like, the people who are putting in 10 quid, 50 quid, 100 quid, they get B shares, and they're non-voting shares, and they don't have preemption, and they basically follow the main A share owners of the company. What you can do is you can set a threshold to say, if you invest more than X, £5,000, £10,000, you can get A shares. Everybody who invests below that, you get the B shares. So you, as a business owner, you don't have to worry about the fact that you've got 100 people who are, have a say in your business. They don't have a say in your business. They're just kind of sleeping shareholders.
Do you advise that is there some kind of conversation with you, with the entrepreneur, that you advise them on this? Does that make clear?
No, we leave that up to the entrepreneur, really. I mean, we can give you the benefit of our experience, but it's not really for us to dictate that. So.
And so, obviously, in terms of the equity,
in terms of the valuation of the company, the amount of equity you offer, yeah, well, I mean, that's, valuing startup companies is almost impossible to do, so we try not to get involved in that, although if you value yourself at 10 million, which we've had those people come along, pre-revenue, no product, we do say, do you really think that you're worth 10 million quid and you haven't got any revenues? Do you think anybody's going to want to invest in you if you... So, it's all about just putting things in perspective.
I listened to the funding circle.
Oh, yeah.
I think that they won't allow startups.
No, they don't. No, that's right. Yeah,
So
funding circle.
You do,
Yeah, we're a slightly different target market. Yeah, so we're all about funding those early stage companies, companies that are a few years old, up to a maximum of a few years old. Whereas funding circle, because it's debt, they check their credit history, and you need to have accounts and all those kind of things. So it's slightly different. Yeah.
You're going on, sorry, in one of the earlier workshops, I think it was David referred to Financial Services Act implications, obviously affecting this is like an e-prospectus.
Yeah.
So there are obviously FSA regulations that need to be overcome.
Yeah.
Can you just talk us,
Well, we've basically kind of covered all that off, so we hope that the entrepreneur doesn't need to concern themselves with all that kind of thing. So we've made sure that the way that we have structured our business, we are compliant and within the regulations. We're in the middle of our own FSA authorisation at the moment, so hopefully as an entrepreneur you don't actually have to need to worry about those kind of things. Yes?
Have you got any formula for the, say the company at the moment getting 150,000 a year, say, coming in? Would you recommend to them what sort of capital they could go for from your experience?
Well, it's more about what do you want to do, and what kind of capital do you need to do that. So, it should be around developing a business plan, setting out in your business plan the different milestones you want to hit, and working out how much money you need to hit those milestones.
Is what the entrepreneur requires?
Yes. yeah, no, we don't get involved in that side of things. Yeah.
Do you get involved in later stages if the investor wants to sell, or is that just them who?
At the moment, no. I mean, one of the things that we're looking to do is to build a secondary market from Crowdcube, so that once an investor's invested in one of these businesses, they could sell their shares on a secondary market. So that's something that we're looking to develop in the future.
If somebody's invested in a business, do you use that information to sell another business that might be interested in?
That will be something that we start to do. Yeah, so the kind of the Amazon thing where you bought this, therefore, and other people who bought this one. Yeah, we'll start to do that kind of thing. Where did I get to? Cost effective. So marketing effects. I mean, obviously, what you would have is when your business is live on Crowdcube, you're going to get tens of thousands of people looking at your business. And not only will they potentially become investors, but they could also become customers as well. And that's a lot of the businesses we come through to us, especially the kind of retail consumer type businesses, like the fact that they could actually kind of get a combination of investor and customer out of this. And often they can be the same person. And they can often be evangelists as well. Once you get them on your side, they'll go out and tell other people about your products or your services. And you also get, whether you kind of like it or not, you get crowd feedback. So because you've got all these eyeballs on your pitch and on your product and on your business, you'll get people saying what they like about it, what they don't like about it. And it's almost like market research to some degree. You should be able to get a lot of feedback, which hopefully you can take constructively. And
Google Analytics or something different?
Well, we've got our own kind of internal stats that we've got what we call our entrepreneur dashboard, which tells the entrepreneur how many views they've had of the pitch and all sorts of different things they can use to help kind of market their pitch. Yeah.
What if it doesn't reach the target? Sorry to interrupt. What if it doesn't reach the target?
Sorry, yeah, I should have said. So the model is an all or nothing funding model. If you say you need £100,000, you have to raise £100,000. You have 60 days to do that. If after the 60 days you haven't hit your target, then you don't get any money at all. The investors, they don't get charged. So the investor model is we get them to agree to a direct debit. The direct debit is drawn when you hit 100% or shortly afterwards. So it's an all or nothing model. Yes?
I have two questions. What due diligence do you do on the investors that you put in behind your website? And also, how does Crowdcube get remunerated for the provision of this service?
Okay, so the due diligence on the investors, is that the question,
yeah?
We don't do any. So the due diligence is, do they put the money in or not? If they put the money in, then great. I mean,
so how do you manage money laundering then?
We don't take any money. So the money is done by direct debit and it's paid straight to the investee company. Okay. But we do money laundering checks on anybody who invests more than £10,000.
Yeah.
Okay.
10,000
It is, yeah. Sorry, your second question was, how do we make money?
How do you get remunerated?
Yeah, so we take 5% of the monies raised if they're successful.
Right.
Sorry, from the entrepreneur.
From the entrepreneur, yeah.
You mentioned, again, going back to the rejected applications that you have. Do you then offer advice if those people want to come back? Do you tell them what they need to do to change in order to come back at you?
Well, we try and point out where the weaknesses are in their documentation, and what we try to do is refer them to a group of people who are specialised in either helping people with business plans or helping people with financial forecasts.
So you work with a group who have some criteria for each application that you apply?
Well, we have a rough criteria. I mean, we have a rough idea of what you would need to contain within a business plan. On the financials, we're quite strict about how the financials are set out, and we have some criteria that you can download from our website and how that's all put together. Business plans are a bit more fluid, aren't they? But there's generally the usual sections you would expect to see within a business plan, and they would all need to be covered off. Well, the typical line within the industry is kind of 3 to 5 years. That's what people tend to quote. And if an investor would probably like to get their money back within 5 years, I would imagine. Everybody's different, but yeah. Oh, and from an entrepreneur's point of view, once you've received the money from the investors, there's no obligation for you to pay that money back to them at any particular point. If the investor's got £1,000 worth of shares in your company, if they can find somebody to buy it off them, then that's the way that they can get out. The only other ways that they can get out normally is at an exit event where the company is sold or floated or something. Share certificates. 2 different ways. We have an automated system which will automatically send out a PDF by email to all of the shareholders. So if you've got several hundred, you don't really want to be writing out several hundred share certificates. So we've got an automated system to do that, but some people prefer the personal touch and to write out a certificate, and several of our companies have done that manually as well. So there's different ways of doing it. Yes, at the back there?
Yeah. How are you funded at the moment as a company?
So we've
What's your exit strategy?
Well, in 3 to 5 years, we bootstrapped ourselves right from the very beginning. So we literally borrowed some money off friends and family to get us going. Then we funded ourselves through our own website. In December of last year, we raised £300,000 on our own website. We're currently at the moment doing another round of funding, which will probably end up coming from VCs or somebody like that. Okay, so we're going on to investor benefits now. So you'd think that the obvious reason for people investing in businesses is for a financial return, but our research says that that's not necessarily the top reason that people are investing. You'd be surprised to know. But of course, you know, when you're putting a pitch together, there needs to be a clear return on investment. So you know, that's probably of the top 2 reasons for people investing. That is one of the top 2. But the other one is for fun. Our investors tell us that they're doing it just because they think it's a great way to spend their time. It's a bit of a hobby. And we've coined this term kind of armchair dragon. So people like the fact that they can sit at home on their kitchen table and they can search through different businesses on our website, and they can put a few £100 there and £10 there, and they build a little portfolio, they can follow their investments and follow the businesses. Friends and family, so friends and family is a very common way of raising money. We use it ourselves, but this is a way of formalising that. So if you've got a lot of friends and family who want to invest relatively small amounts, it can be quite difficult to get all that together in a proper way. But this is actually a way that you can use that to kickstart a bigger amount of money. So if you're looking to raise £100,000, if you can get your friends and family to pull together, I don't know, £10,000 to £20,000, then your progress bar on Crowdcube is going to go up. And other people who are looking to potentially invest will get the reassurance from seeing that your friends and family are investing and potentially want to invest as well. Participation is an interesting one. Some of the businesses that we've funded have had their products in high street stores, so they've been in Sainsbury's and Waitrose, and it's a great feeling to be able to invest in a small company with those kind of products, and then go into Waitrose and pick up a product that you know that you're an investor and a shareholder in that small company. So there's that reason as well. And the other thing that we see is, as you saw on one of my earlier slides, angels tend to invest tens of thousands of pounds. And when you're investing that amount of money, most of them can't afford to invest in lots of different companies. So their risk is normally in 1 or 2 companies. But with this method, you can lower and spread your risk. So rather than putting £20,000 into one company, you can put £2,000 into 10. And the odds are that, typically in these kind of investments, that out of 10 businesses, you probably get 3 or 4 of them are going to fail. 3 or 4 of them are probably going to do not much at all. And one of them is probably going to be a big superstar and is going to be the one that gives you the majority of your returns. So it's really important that you have a diverse portfolio of investments. And the final thing is, it's a really simple way to invest. You've seen basically, you find a business that you're interested in, type in an amount, go through the kind of e-commerce procedure, and in a matter of moments you've got an investment in that company. And there's not many other ways that are quite that simple. So in terms of what we've done, I didn't say the background to our company. We launched in February of 2011, so we're about 18 months old now. And it took us until July of 2011 to fund our first business. So since then, we've now funded 31 businesses, and we've raised 4.2 million for those businesses that we've funded. And some other interesting stats there. So our average investment's about £1,800, and that's gradually gone up over the last 18 months. And that's way more than we ever thought when we did our business model and our business plan for Crowdcube. We thought people would be investing £50, £100. But people are putting in much larger amounts of money. And that's highlighted by the largest single investment, which is £100,000 from one person, which actually 3 individuals now have invested £100,000 each. Which we really didn't expect them to be doing that early on. We've got over 25,000 registered investors on the website now. And the biggest deal we've done in the last year has been for £1 million. And again, that just was way out of what we ever expected to do in our first year. So Bubble and Balm, I mentioned the first company we funded in July. That was a company called Bubble and Balm for 75,000. Rushmore was the £1 million deal. So they are a chain of bars and restaurants in London. Crowdcube, so as I said, we crowdfunded ourselves back in December of last year. Escape the City was an interesting one. It's a bunch of guys who, the company is a website that helps connect people who work in kind of boring city jobs and want to do something more interesting somewhere else. So whether you want to become a chef in Brazil or building tree houses in Angola or something. But they went out looking for money and they spoke to all the usual suspects in the city and they went to VCs and they got 2 term sheet offers, 2 offers from 2 VCs, very prominent VCs. And they turned them both down and decided to come to Crowdcube instead, and they raised £500,000 in a week. And were so oversubscribed they decided to raise a little bit more, and they raised another 100 grand in 2 days. And the reason they did that was twofold. One was that they didn't want one big shareholder to own a big chunk of their company, which is going to drive the direction of their company. But secondly, their members became investors. It's this dynamic of a kind of customer shareholder kind of thing. And they loved the idea of their members not only being their members but being their shareholders too. Why haven't they funded? Yeah. For a variety of reasons. I mean, what we don't do is we don't judge when a business comes to us whether we think it's going to be a success or a failure, because who knows, and if I did know then I would be on a beach somewhere. So it's for our investors to decide which ones they want to invest in. So what results is that some of the businesses that get listed aren't actually that great businesses. So that'll be the reason why some of them don't. Some of them don't because people don't understand them. So we've had quite scientific and technologically difficult to understand products and services on there. And unless the man on the street understands it, they're not going to put their money in it. Some of them have been very lazy and they think this is an easy way to raise money. And I thought, well, I'll stick my picture up and in a few weeks' time I'll have a few hundred grand in the bank. Well, it ain't that easy. You know, you need to go out there and push and engage with investors. You know, raising money is not easy whatever way you do it, and if you think it's going to be, then you're not going to succeed.
So do they get flags after, say, after 10 days or 20 days, you send some sort of email saying you need to get out there and push your business? I don't know. We try to give them a nudge along and say, what are you doing? It's not really progressing. These are the things that you might want to consider doing. Yeah, we do.
Yeah, hi. I might have missed, I was sitting in the wrong room earlier on, so I was watching Cloud.
Do you want me to start again?
Am I right? If you got funding and you were successful,
yeah.
What do you have to promise the person who's invested? Is it you don't, or you?
So it's shares. So if people are investing to get shares in your business, you're asking for a certain amount of money, you're offering a certain amount of equity in return.
And how about the dividend? Is that what you decide, or is it a law thing, or? Is
well, dividends are always decided by the company. So if you're lucky enough to make a profit, then you can decide to give a percentage of that back as dividends. But
normally be a dividend policy.
Yeah, I would say that there would normally be a dividend policy, yeah. But I mean, these kind of companies are so early on, it's going to be a while before they can afford to give any substantial dividends.
But you don't actually write it in your thing, your proposal, say you will get this?
Some of them do, yeah. I mean, if you want to attract investors, then again, you need to give them a reason why they want to invest.
That's what I was thinking.
And if you think you're going to be able to afford to give a dividend, and if you can demonstrate in your financials that you're making enough of a profit to give a dividend, then absolutely say that you will.
I realise it's too early for you to have done many analytics, but is there a good time to put up an investment proposition?
A good time of year?
Yeah.
Well, we don't think there's a good time or a bad time. I mean, it is too early to really sell, but we didn't see really a drop off over the summer, and we didn't see a drop off over last Christmas either, because people do this from home quite a lot, or you could be at home over Christmas and you get a bit bored of watching Christmas telly and log on into your iPad or whatever and flick through. So people tend to do it in their spare time as well. So we don't think there is a time which it will necessarily be better or worse to do it. That is it. Yeah. Yeah, so I didn't actually mention there is a legal fee cost as well, which is £1,750 to do the legal work at the end to get the Articles of Association. But again, we've tried to keep that as low as possible, and I don't think you could go to most lawyers and get all your legal work done for that kind of money. So we've kind of templated it to some degree, and we've, because we're doing we've got to deal with a set of lawyers who are doing it over and over again. We've got a better deal. So,
how does the 4.2 million look to you on your own plan?
It's more than we imagined it would be.
It's a bigger figure?
Yeah. Well, we did used to take cash payments, and we had to hold the payments in escrow in a client account, effectively. And then at the end of the period, you either pay people back or you pay the money out to the company. But that has two difficulties. One is that the FSA think that's holding client money, which there's whole load of legal implications to that. And the other side is that, we tried to fund Darlington Football Club because they were going out of business, so we thought we'd try and help them out. And there were 900 odd people who invested. They didn't hit their target, and we had to do 900 payments back to people who had invested 100 quid ago. And this was manual, log on to your online banking, one payment at a time. So it's not scalable, and this business needs to scale to work. So if you only raise 90,000 and your target's 100, then you don't get any of it.
What does the money go in the meantime? Does it stay with the investor?
So it's all you've done is the investors have agreed to pay at a future point if it hits its target. But it tends not to happen that somebody gets to 90%, because it always will then get to 100 because people start to get, it's like at the end of an eBay auction, people start to go a bit crazy. Yeah, we've not really had that as much of a problem, to be honest with you. We've had to chase a couple, and sometimes the direct debits failed for certain reasons. They didn't realise the money was going to come out then, or that they saw it on their transaction and didn't realise what it was. So there are a few, but generally we don't really have a huge problem with that.
So do you set that all up, or is it the investor who has to set up the debit and then sort of...
We do it all for them. It's all automated. Yeah.
So if I pledge money,
yeah.
do I give my card details so that when the money needs to be taken, it's taken automatically?
Yeah, you just bank details.
So you don't have to contact me.
You talked about risk in terms of reputation and integrity, and the fact that you've acted honestly and above board, and a company comes along and thinks, hello, I think I can get a bit of money here. And comes up with a product that probably potentially doesn't exist or something. I don't know. I mean, I'm thinking through. Actually, I'm thinking Wonga or something. I don't know. I mean, sort of. But it could be that say a company gets their investment and then suddenly they say, "Oh, I think I just closed down today." And then I don't know.
I think that's very unlikely to happen for a number of reasons. Firstly, that a lot of the business, as I've said, most of the businesses are already in existence that come to us.
Yes.
Secondly, we do a lot of vetting of the business. And we check the directors, so we do company's house checks, we do ID checks on the people, we do AML checks on the directors, so we check them out that way. And then thirdly, tens of thousands of people look at these, and there's a discussion forum for everyone. So if there's anything suspect about them, somebody's going to pick it up and talk about it.
Okay. In the off chance that someone didn't, I know you say you haven't had any yet, but someone didn't pay, so you reach, say, £100,000, someone pledged £1,000 and they didn't pay, then it takes you down to 99,000. You still get that 99,000, or
in that case, for £1,000, we would give you the 99,000. Yeah. If it was 25,000, we'd probably have to relist and try and re-raise the other 25,000. Yeah. Well, we'd get quite advanced notification that one of the significant amounts of money had failed, and then we could take action on that. Yeah.
Did you say there was a discussion forum for each?
Yeah, I should have mentioned, so every pitch has, if I can just take you back to the screenshot actually, this would work. If you see across the top there's some tabs, there's a Q&A tab. If you click on the Q&A, there's a discussion forum where investors can ask questions of the entrepreneur. And they can be a bit feisty in there as well, they can ask some tricky questions. But it gets discussion going around the opportunity.
So that's potential investors.
Potential investors, yeah. Yeah.